Hi traders, you're welcome to my channel. I am OT Josh, and in this trade I'll be doing a call trade after this because this is what we are having here. So if you look, we have strong buying pressure. Now, like I told you before, when the price is above the the middle Bollinger Band, we have an uptrend. If it's below the middle Bollinger Band, we have a downtrend. Now, if we have an uptrend and the price is inside the one deviation upper and one deviation lower, we have a strong uptrend. Now, it seems like the market is in an overbought position. Why? Because the market is outside the Bollinger Band, but price has not yet reacted to that overbought condition. So what we are going to do is to wait for the market to show a sign of exhaustion in this uptrend, which is showing now, so that we can use now. Now price is at the overbought condition. So as you can see, there is a round number here. So this is an exhaustion candlestick. That is an exhaustion candlestick, and we're going to do a trade against the uptrend. Against, oh, it's already going down, so let's wait. Okay, I will do it now, and then I will let you know why we are doing a trade against the uptrend. Even if it's a strong uptrend, we'll be doing a trade against it so that it comes back down like this. It comes back down like this. It goes up here. It comes back down somewhere here, and then it continues its movements. You understand? Or it comes back here. It ranges, and then it breaks down or it breaks up. So let's wait and see. I got into this late, but since the momentum in the market generally it's a strong momentum, I believe this one will be closing below the entry point. So let's wait. 3, 2, 1, and okay, I got that in the morning. So now we won't be trading in the downward direction. I believe we should be doing trade to the upward direction, and I will show you why. Okay, I got a little bit of rejection, and I'll show you why I did this upward trade, because I believe it will close above this entry point. I will show you why, because we have what a change of polarity, very tiny one happening here. If you look carefully, you'll see it. I just saw it, so I took it, and maybe I took it at a higher entry point. It should have been lower, but as you can see, this wick here that provide a resistance, this candle broke it up. This one came back down and it made a support. This has shown that this has a buying pressure still here. So I did a put trade. It is a fast 3 minutes trade. It's been a very long time since I was able to do trades like this. So let's wait and see how it goes. Okay, we got that in the morning. Okay, now let me explain to you what really happened here, because this is a fast trade, so I'll take my time to explain. But before then, I want you to understand something. I told you about failure strategy. Right now I'm making a deep explanation video on that. So I'll tell you more about that in it. But first of all, I want to show you, because it is really a very, very, very reliable strategy. Now look at this. We had an uptrend from here. We had this uptrend, right? And now this is a round number. This one here, it is a round number. I told you before, round numbers, EMAs, Bollinger Band are places where price will always react. Now this is the round number. So we have a shooting star candlestick here, right? We have a shooting star candlestick here. Now with this shooting star candlestick, we are expecting a reversal. True or false? True. Now this candlestick came back down and went up. Now this other candlestick now came back, went up and came back down. This is the sign of the reversal. But listen carefully. The price action is not what determines the direction of price. It is the sentiment in the market. That means the overall market condition determines the direction of price. Now the candlestick pattern, which is the price action, confirms that direction that we already have in mind. So if you can get this clear, then you understand now that since this candlestick went up and closed below, there are people who have There are people who do not have this Bollinger Band in their charts. They do not have it. So they cannot see that price is in a point where it will not reverse. They can't see that. So what they'll do is simple. They'll do a put trade here with this candlestick. Let me get this closer. Um, let me get it closer. Okay, so that we can. Okay, so what they'll do now is this. Remember, there is a round number here. There is a round number here. Sorry. So they'll do a put trade now with that candlestick here. Yes, there is a round number here. So when they do a put trade, after they see this candle, they'll say, oh, this is a shooting star. This is another shooting star. This is a round number. They'll do a put trade here. They are not saying that price is in a strong uptrend. So they are trading against the trend. Now, here's what happened. When they do the put trade, most traders now, from here, the price is going to come down only a little bit. But the insiders who have the money to push price already know that this is an uptrend. So they will take the money that those people who have done the put trade have wasted. They'll take it and they'll continue pushing this price upward. Now, for me and you who have the Bollinger Band to show us the direction of the trend, we are going to see this, but we'll continue buying. We won't sell. All we need to do is to wait for this candle to fail to reverse. And as you can see, it failed to reverse because it broke the round number. So it failed. So this is the failure that shows direction of the trend. So you can do your trade for 4 minutes, 5 minutes, but I prefer doing it for 1 minute. Failure shows what? The direction of the trend. Now we know that this is an uptrend. Let me go to the next trade I took so that you understand why we do some things that we do. Now, this is now an uptrend. This is the Bollinger Band. If you look closely, you will find out that in the market there is always an overpriced goods in every market. Now, this uptrend market is now being overpriced. It is an overbought condition. This is not the real value of the price. If it were the real value of the price, then the price would have stayed within this range of 1 deviation and 2 deviation. Now it's going outside. That means this price is abnormal. It is abnormal. It needs to come to a normal price, which is doing here before it goes up. Now, if it's abnormal, then it is an opportunity for traders. Right? Now, how do we take advantage of this opportunity? That is what we call exhaustion candle. Now, an exhaustion candle happens in a trend that has been oversold or overbought. It is the biggest candle that comes within that entire trend. So if you look 1, 2, 3, 4, 5, 6, 7, 8, within this 8-minute trend, this candle is the biggest candle. And where is it happening? It's happening in an overbought. This candle started the overbought. This weak candle continued the overbought. This candle confirmed the overbought. Now I'm going to take it back. Sorry, I'm going to take it forward so that you can see that at the same time where this candle overbought happened, we also had a round number. What are round numbers? These are points where reprice action take place. Round numbers, EMA, Bollinger Band, support and resistance. This is what technical analysis is. Now, overbought area plus round number. Now we can safely, I did this late, but I was supposed to do it immediately here. So we can safely say, okay, this is an overbought area put, right? We do the put. Now, when we do the put trade, it does not mean that the market wants to reverse. It means the market needs to get priced in a balanced place. It means the market needs to get priced in a balanced place. When price is in an overbought area, it comes back down to key levels. The key levels might be like the fair value gap I told you about. It might be the 1 deviation Bollinger Band. It might be a support and a resistance. It might be a pivot point, order block. It might be any key level, Fibonacci level. But in this case, when I looked, I saw that it was coming back to a change of polarity. Now this takes us to our last trade. Now this is it here. What is the change of polarity? I thought I've said something about that in our previous video that I did, but I'm still going to talk about it here. Okay. Now this is how the change of polarity works. Now we know we had this uptrend here. Excuse me. We had this uptrend. Now overbought. Price has to come down to look for balance. But when it came back down, if you look at this point, you see that this candlestick, every candlestick wick is a support and resistance. Mind you, the upper wick here and the lower wick here support. This is support, this is resistance, this is support, resistance, support, resistance, just for that candle. So now we see that this candle has support, it has resistance. I'm putting my points there in case this candle now broke it and this candle came back at that place where the resistance was where this resistance formed, a support was formed there, and we know that the market needs to come back down to go back up again. So I did a put trade here because this is now a change of polarity. What is the psychology behind the change of polarity? Those traders, just like the failure strategy, those traders who sold with this wick and this price continued going up, they are now in a losing position. So when the price comes back down, those traders who sold here, who are now in a losing position, what they'll do is they'll close out their position, right? They will have to become buyers, and when they buy, the market goes up. So this is how we came about this trade. And so the market will have to continue within that range I told you about. So when it came back down at the same point, look at the same change of polarity and one deviation Bollinger Upper, an engulfing candle was formed. Now a continuation. Now look carefully what's going to happen here. Price is now going to the overbought. What is happening here is what is happening here now. In this case, failure strategy will not work because price is in a place where it's supposed to reverse. Now, if this candlestick pattern, these two candlestick patterns, if they were happening at this point, failure would be used. We'll be using the failure strategy, just like we did somewhere in the past here. Okay, somewhere in the past here. But in this case now, this is an overbought area because there is a round number here. The price has gone out. You can see it's even rejecting from the round number. So now this candlestick, we have to come down and then look for another point to get the upward trend going. So where is it going to come? It might come, we don't know, so it might come back to this point here in conjunction, in confluence with this round number. It might also come down to, if we use our fib level, it will come down to, to draw your fib level, you need the swing low, the lowest low now, and the lowest high. If you put it here like this, let me change the color to white so that it's 8. Now this is our Fibonacci level. Now let's just watch. I'm going to remove everything and let's watch how the price reacts with Fibonacci levels. Okay, I'm going to remove all the lines so that we use only the Fibonacci level. Okay, this is the Fibonacci level. Now let's watch. Now we have the 30. The price is now at the 38.2 level in confluence with the one deviation Bollinger Band. Now you see that it is the 38.2 level that the price is reacting with. The strongest level is the 61.8 and the 50, but now you can see how the price is reacting with the 38.2. So from here and onward, the market will be going upward. It is as simple as that. I have everything detailed in the ebook. If you haven't gotten the ebook, please try as much as possible to get it. So from here, the market might be going up, or we can be seeing a double top forming. So if you look closely at this trade, I have it there. Here is the ebook. Now you can get everything from here. Everything we have, everything I explain, everything I teach, I make them from here, so you can get them. If you want the ebook, the link will be at the description of this video or any other video of mine that I have done. You are going to find it. I want to show you, there is a trade I just explained just now. so that you can see it. It's the setup is right there. I think I have it. Let's see, I have it somewhere here, but I can't find it now. That was the trade about the change of polarity. I saw it somewhere. So I wanted to show you so that you understand that these things, they really happen real. They happen. So I think it's at the, okay, here is it here. As you can see, this is it. You see this one, this EMA and the Bollinger Band crossing. I'm not talking about that now, but it's showing buying pressure. So as you can see, imagine that there is a resistance here, and this is the breakout, and this is the change of polarity happening. This is what we had here. This is exactly what we had here. You understand? Exactly what we had here. So if I should put the 20 EMA that I showed you in the video, here is the 20 EMA. As you can see, it's above, look at it, it is above the middle Bollinger Band. If you come back here, you're going to see it here above, it is above the middle Bollinger Band here. This is the yellow line and the green line. So everything you need is there. It's just for you to take action, and that action requires a mindset, like I told you, all about our mindset and our ability to study to change our financial future. So if you like this video, please do it to give it a thumbs up. If you have a question, please leave a comment in the comment section. And if you haven't, please do it to subscribe to this channel and share this channel to your friends that may find it useful. So until next time, I wish you a great trading day. Bye bye.